Friday, November 19th, 2021, Monaco 64, home of alternative economics and contrarian views. So it looks like a fourth wave of COVID could bring about a new wave of QE or money printing and government stimulus or fiscal spending for that matter. That's my take on things. And this is far from over. I've spoken about this over the last year or more, that this is going to continue. And we have documents, of course, that tell us that, for example, from the World Bank, which is part of the whole United Nations infrastructure. It was created back in the 40s as a result of Bretton Woods, works together with the IMF and the United Nations, right? And we had a document last year, just in the beginning of April. It was all prepared already. And it's entitled COVID-19 Strategic Preparedness and Response Program, and proposed 25 projects under phase one. So this is the cover, but we need to go scroll down here and show you why this is far from over. So here on page, let's see, page, well, it's the 6th page of the document, but it's the first page of the explanation, or the main part of the document. It says, expected project approval date 2nd of April 2020. Expected project closing date 31st of March 2025. Yes, so there you go. They're expecting to drag this on for a very long time. What's it all got to do with, if they had all of this prepared over a year ago, before even things started kicking off? How come they had all these things programmed? How do they know how things were going to evolve? Well, my take on this is that this is, of course, an excuse, a scapegoat, a cover for something that I don't really know, to be honest, exactly what it's going to pan out like. A lot of people have their own opinions, different opinions. I'm not going to go into this here. All I want to say is that I think the stimulus, last year we spoke a lot about not just monetary stimulus, but fiscal stimulus, and they go hand in hand. That's going to continue. And the excuse, of course, is going to be the new fourth wave. And one of the reasons they've been doing that, of course, is that the system, the financial monetary system, was dying, started dying back in September of 2019 with the repo crisis, when the overnight repo rate jumped from around 2% to 10% in one day. And that meant that financial institutions were losing confidence in each other. The system was going to collapse. Later on, we saw that some big hedge funds, and I'm not going to name them, but some of the people who had these hedge funds, they've been critical of the central banks, of their monetary policy, but I would say their firms wouldn't be probably operating still if it hadn't been for the largesse of the Federal Reserve, of the ECB. They've more than doubled their balance sheets, I would say, in the last 18 months. And those hedge funds wouldn't have survived. And unfortunately, they're still around. And I think we're getting to a point, and many of you who watch my videos are probably not surprised. And why is that? Well, because we're getting to a point in this fiat currency system where the leverage is so large, the amount of debt is so large, and the government has become so big that they have to keep going or else everything implodes. And this is what they're going to do. And they've got a great cover, of course. And why am I talking about a fourth wave? Well, you just have to look at the newspapers and the news here in Europe for the last few days. And granted, I'm not sure what's going to happen in the United States, but I wouldn't be surprised if the same kind of thing would happen there, because the major countries are all doing this together. They're building back better, right? The Biden administration is using that motto. The Conservative Party, which is supposed to be a polar opposite of the Democrats, is using this model. Everyone is using it. But as you can see here, the big headline in the Telegraph online this morning is lockdowns return to Europe as COVID surges. Toughest restrictions loom again, including for the double jabbed to combat deadly fourth wave of coronavirus. And there's an analysis. They're putting this in people's head over here, because over here in the UK, from what I hear, and maybe I hear more of the people who think like me, but the feeling is that people are going to ignore a possible lockdown for Christmas. But they're putting it into people's head. It says, analysis, will Europe's fourth wave hit the UK? Anyway, what does it mean in terms of what we look at? Gold and silver, the economy. Well, I think it means another round of stimulus. As I said, more money printing, more government spending, because they will have an excuse, right, to do this. They might even bring in another furlough scheme. Who knows? Maybe I'm getting ahead of myself. But that's how I see it. And that's why I think commodities as well are going to keep moving higher. Yes, politicians are blaming speculators, oil companies for higher prices, but they never look at themselves, the fact that they borrowed so much that they don't have. They've had the central banks create so much that they don't have either. So much currency has been created. It's not just been the Fed's balance sheet. It's been M1, M2, gone through the roof, and that's going to continue, I think. And there's no amount of bullying from people like Biden or anyone else around the world about speculators. They need to blame themselves, and that's why they're going to lose. And commodities are going to keep going higher. The fiat currencies, the dollar included, are going to keep going lower. So yesterday, I went into the city of London. I went to see Simon Temple of Gold Investments. They're very busy. And the city of London, though, seems very quiet. I worked there for over 20 years. I went around just before lunchtime. I was there during lunchtime, and it feels like a ghost town, really. There are people around, but a lot of the smaller businesses, the ancillary businesses like the small restaurants, shops, a lot of them are gone, which is sad. So yeah, things are not back to normal. And anyway, with that, let's quickly look at where the markets are this morning. It's 8:23 a.m. London time. We've got spot gold at 1856.30. That's down about $2. Range has been 1864 to 1856. So we're near the lows. Last week we broke through key resistance levels, not just in dollars, but all fiat currencies. This week we've made a new high around almost 1880, and now it's kind of how can I say, consolidating. And it's positive that we're still above that 1833 level, which was the key resistance. So silver is at 24.77. It's unchanged. The high's been 24.95, the low 24.73. Stock market, yes, stock market, it's just like a casino. It's not real, I would say, especially with what's going on now in Europe and what could happen, and is very probable that will happen. And I didn't even speak about the new Fed, or it could be Powell still. They're going to nominate the new Fed chairman or chairwoman, could be a chairwoman, probably tomorrow. They came out a few days ago and said, oh, in about 4 days. But the other thing I've been hearing from mainstream economists, I heard one guy on talk radio. He was a former UK Treasury economist, and he said, oh, the Bank of England, they can't raise rates because it's going to hurt the economy, but they can stop QE. And then you had, I think yesterday, one of President Biden's Department of Labor chief economist, and what's her name, Janelle Jones, she said she wants the Fed to run the economy hot to boost jobs. She said inflation doesn't matter. We have to keep inflation high because it's going to create jobs. What a load of cod's wallop, I would say. But that's the way they're thinking. And that's another reason why I'm going to hold on to my tangible assets, to my gold and silver. Yeah, and the commodities as well. They're going to continue to do well. I hope Billy doesn't fall off. Billy, you're all right, boy? I just had to help Billy out because he's not seeing well at all. So I was concerned he was going to fall off. Anyway, so let's continue. So what is the Dow doing this morning? Yes, it's up 124 points. The Dow future up a third. I think the markets know that the easy, free money is going to keep coming. The NASDAQ 100 future is up 75 points, or almost 0.5%. S&P is up 17, just over 1/3%. The FTSE is up 30 points, just under 0.5%. To the currencies, we got sterling unchanged, 134.88. We got the euro down a third at 113.36. And the dollar is up 0.2 versus the yen at 114.45. Dollar is unchanged versus the yuan at 6.38. Aussie dollar is unchanged, 72.81. The dollar is unchanged versus the Canadian dollar, 126. And the Kiwi dollar is down about 0.25% at 70.28. To the commodities, we got crude oil up 1%, WTI, just above 79. We've got high-grade copper up almost 2% at 438.30. Natural gas is up 1.75% at 5.05. So even the energy markets are rebounding back up. And just to finish off here, a quick look at the 10-year yield. We're up just under 2 basis points at 1.6%. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great weekend. Take care. Bye.